Hello, everyone, and welcome to the Financial Profit. I'm really glad to see you here. Today, I have a very special topic for you. We will review Q4 and the full year 2025 results, and of course, we will talk about setting the all-weather portfolio, the AWP, up for what is already this year, 2026. Now, our all-weather portfolio, AWP, performed very well in 2024, delivering a 69% return versus the S&P 500's 23.3% gain. Now, while this dynamic illustrated a solid 200% beat over the major stock market average, 2025 proved to be even better despite the increased volatility in the first half of the year. In 2025, the all-weather portfolio appreciated by 78.2%, crushing the S&P 500's 16.4% return, achieving an outperformance rate of 377%. In addition to outpacing the yearly numbers, Q4 was also an excellent quarter. The AWP returned over 10% in Q4, which was much higher than the 2.35% return of the S&P 500 and the 2.57% return of the Nasdaq. So how did I beat the market? Well, it was several factors, but back-to-back 30% plus quarters, Q2 and Q3 2025, they certainly helped. These excellent post-April bottom returns were followed through with an excellent 10.4% return in the fourth quarter. However, there's so much more to discuss than just numbers. So let's get into what worked, what didn't work, what could have worked out better, and perhaps most importantly, how I am positioning for 2026 to achieve optimal results and maximum outperformance in the new year. So let's begin with the tech segment, which basically consolidated in Q4. The tech segment, while exciting in certain places, also had a challenging time in the fourth quarter. The market went through pullbacks, consolidations, and corrections, especially in AI and other more speculative and higher alpha areas. Now, my diversified tech segment gained only 0.2% in the fourth quarter, and this was due to several tech stocks bringing in worse than anticipated results. For instance, part of my Oracle position went down by 20% as I began building a position in Oracle just a bit too early, it seems. Mobileye was another disappointment in the quarter, with part of my position diving by more than 20%. However, they weren't all losers. I made over 20% getting in and out of CoreWeave. I took partial profits on my AMD position after locking in 60% plus gains in the fourth quarter. My core AMD position gained over 32% in Q4, and other tech holdings also performed very well in the fourth quarter. Now, going forward, I remain bullish on high-quality tech, and I have a very nice-sized, diversified tech position going into 2026. Several of my top and highest conviction holdings include Tesla, AMD, Snap I also like, NVIDIA I'm beginning to like more here because of its valuation coming down recently. Meta Platforms has come down a lot. Dell has had a significant correction and looks really cheap here. And some other high-quality tech stocks also look very, very attractive around recent price points. Okay, so that's enough about technology for now. Let's talk about oil services and the energy sector, which actually brought in 21% last quarter. So it performed very well. And again, outside of the tech space, most other stocks did very well. For instance, the oil and energy space surged by 21% in the quarter. Top performers included Halliburton, Schlumberger, and others in this space. And as we advance, oil and energy stocks can continue to do well, as oil is extremely cheap right now, I believe, and it will likely not remain at these deeply discounted prices for long. Therefore, we could see increased demand in the oil market, oil services, and the energy space in general, leading high quality stocks in these segments substantially higher. I continue to like Schlumberger, Devon Energy, and other high quality, high reward, low risk type of stocks in the oil and gas segment. Next, biotech and pharmaceutical segment had a very solid quarter, appreciating by more than 15%. Several standout stocks included Regeneron, which part of my position went up by 35% in the quarter. Amgen went up by 20%, and other stocks in this sector, they also outperformed. Now, I gradually reduced my pharmaceutical and biotech basket throughout the quarter, as I believe that going forward, there may be better opportunities in the market as we enter 2026. We've already seen the pharma space have a significant recovery. Now, that doesn't mean that the recovery won't continue, but it's possible that the easy money has been made here, and in the future, we may want to be a little bit more selective in this space. So I will keep my eye out for attractive opportunities in the healthcare industry as we advance in 2026. Now, I want to talk about the aerospace and defense sector a little bit because this segment did very well, appreciating by 30% in the quarter. Now, the aerospace and defense segment, it actually did really well in Q4. We had some huge winners in the quarter, like Intuitive Machines, gaining 54%. My Rocket Lab position surged by over 50% in Q4. Now, I also locked in some solid Red Cat gains after it had jumped by over 60% in the quarter. Aerospace, I also locked in a 60% plus gain in Q4. Boeing also did well, and other more traditional defense stocks also did well in the quarter. So we had a stellar quarter in defense. For the future, defense and aerospace still extremely important going forward, as space and war applications, they're essentially intertwined. Moreover, we're seeing more demand in the drone and other autonomous sort of war instruments. In the future, we could see more robotics and AI coming into play. So there are many moving parts here and many important companies in the aerospace and defense industry that could continue doing well in the future here. Now, the industrial, material, and nuclear segment got only a modest boost of roughly 8%. I call that modest. Now, the drag here were primarily nuclear stocks, as the segment went through this AI-related slowdown, pullback, consolidation phase throughout a significant portion of the fourth quarter. Still, we had some solid returns here with Cameco positions delivering around 15 to 30%. I took profits on a partial Constellation position, locking in over a 20% gain in the quarter. Outstanding was the Lithium Americas Corp stock, a position that I closed at $9.32 for a 63% gain in Q4. I've also taken some gains in my Albemarle position. We're going to need nuclear energy to power AI, and we will need lithium to power EV car batteries and many other crucial elements. Therefore, I remain very bullish on the top nuclear names like Cameco, Constellation, Vistra, and others. Moreover, SMR technology has enormous potential. Oklo may be the leading company in this space in the future, in my view. Therefore, I have initiated some Oklo around the recent lows in the $70 to $80 range. Now let's talk about the gold and silver mining segment because this was the best performing segment, up by 33% in the quarter. So again, the top performer this quarter goes to the gold, silver, and mining GSM space, as I call it. Stocks and base metals here performed phenomenally well, especially silver. I have a core physical silver position in my all-weather portfolio, which surged by 53% in Q4. At one point, it was up by over 60%. In comparison, my core physical gold position increased by only about 12%. Silver pretty much went wild, especially toward the end of the year. And that is likely because it is a relatively small market that was neglected, suppressed for a long time, undervalued, and finally, it's having its day in the sun. Some of my top holdings were Hecla Mining, Pan American Silver, Kinrose Gold, Newmont, Barrick Gold, as well as other companies. So I took considerable profits in this segment, but many individual miners appreciated by 20, 30, 40% or more in a very short time frame in Q4. Now, going forward, despite the somewhat parabolic move, I remain bullish. However, we likely need more significant pullbacks here. Therefore, I have my exposure to GSM's limited for now. Nonetheless, I plan to increase it at a more appropriate time. Let's talk about Bitcoin and digital assets because this segment gained 18% in the quarter. Bitcoin and the digital asset segment did fairly well for us last quarter. Now, despite the general downtrend throughout the quarter, I picked my entry and exit points very carefully, even locking in some partial positions for 100% plus gains in the quarter, like with Dogecoin, Cardano, Polkadot. Now, Bitcoin had a significant 24% correction throughout Q4. Therefore, generally, what was not a very good quarter for crypto turned into a very solid, very digital asset quarter for the all-weather portfolio. I also boosted my Bitcoin and other top digital asset holdings around the $80,000 to $85,000 support level low. Now, going forward, I do like Bitcoin more, especially after the pullback to the $80,000 to $85,000 support range, as it had gotten overbought in the near term around 125,000. Things were just getting a little bit frothy. So I'm glad we're seeing this healthy correction now as the economy moves closer to the period of increased quantitative easing. It's likely that Bitcoin can make higher highs in 2026 under the right, more accessible monetary conditions that I believe we are setting up for here. So the bottom line is that looking forward into 2026, while I am pleased with the AWP's overall performance last quarter, some things could have been done more efficiently. For instance, I could have been more patient with taking profits in gold and silver miners, this would have increased my GSM gains. I could have been also a little bit more patient with increasing positions around what I thought were lows in Meta Platforms and Oracle. In retrospect, I could have gotten better prices. Still, 10.4% is a solid quarter, and 78% is a pretty good year. My most recent 2025 full-year portfolio return target range was 80 to 90%. Now, the AWP came extremely close and was actually in that range. It was up by 85% for the year at one point, or maybe even 87 or 88% at its high point. 2026 began on a positive note, and we could see continued solid performance as the year advances. We are approaching earnings season, and many results could top low-balled expectations in my view. Moreover, the economy is more robust and dynamic than the market appears to anticipate here. We've witnessed solid, better than expected GDP numbers. The labor market remains resilient, as is the consumer. Perhaps most importantly, the Fed is introducing increasing liquidity as it lowers interest rates and introduces quantitative easing. This moderate growth and easier monetary environment could create a sort of Goldilocks zone for many high-quality stocks and risk assets to appreciate in, especially if the AI sentiment can remain robust going forward. Now, due to this relatively bullish dynamic, I am placing my 2026 S&P 500 price target range at 77 to 8,200, and I'm setting my all-weather portfolio's 2026 full-year target return rate range at 30 to 40%. Thank you very much for watching my profit report. I genuinely hope you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is seeking alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time and have an amazing day.